Happy weekend, everyone. Welcome to CTI Market View. We'll be studying the price action on Nifty, Bank Nifty, and review what happened in the global charts last week. In the commodity session, we'll cover the gold and oil charts. Further, we'll have a look of our sectoral snapshot last week and see which are the trending sectors for the upcoming week. With markets being down for a couple of weeks and stocks are available at quite good valuation, we'll study whether we can make any sort of accumulation in couple of the stocks. Well, if you're new to my channel, please subscribe and hit the like button, and you may also post your valuable comments in the comment section. Nifty ended on 19,230, and it was well within our expected lines. We were expecting that a pullback rally is bound to happen in last week, and we indicated the level that Nifty could go up to 19,250, and Nifty did touch 250 levels and then started to make an important doji candle on Friday. So looking at the midterm view, we are still well below our 21 DMA. So the weakness, the broader Nifty still underlies some weakness, and we are still in the negative territory. Having a look at the price action on Monday, it was very clear that we were heading for a pullback rally. We opened close to around 19,000K, just below 19,000K on Monday, and we did show a small rally over there. After that, it did correct and we retested the levels of 19,000, and the breakout happened on Thursday where we did rally till around 19,100 levels. So after this there was a gap up opening over here, and on Friday we had a second gap up opening and we did touch 19,260 was the resistance which we plotted, and you could see here throughout Friday it was close to the resistance zone what we had plotted. So what can Nifty do on Monday? Where on case one, if Nifty decides to be bullish, we can expect the levels of 19,350, and we can expect a sideways performance from the market. And beyond that, it might go up to 19,500. So this is another leg of resistance which can be planned out for, charted out for Nifty. So 19,500 is the maximum level in which we can say Nifty can go. Beyond that, there will be some sort of weakness in Nifty where it can come and retest 19,260 levels, and from there the market participants will try to maintain a sideways market throughout the week. In the other case, if Nifty decides to be bearish, and you can see that this gap which has been plotted here, this can start to go gap down, and we can expect further weakness for Nifty to continue from here. We can go up till 19,000 levels where the Nifty can take a small break, retest the levels of 19,200, and then from there start to show some sign of weakness. So these are the two cases which I have plotted out, whether if Nifty decides to be bullishness or bearishness. This is the two possibilities which we can see happening in Nifty. Important supports to be noted out for Nifty is 80,850, 18,750, and 18,650. In the resistance side, you are having the current resistance 19,260 is also a major resistance, and then next major resistance is 19,350 and 19,450. Well, Nifty option chain analysis suggests that 19,250 and 19,450 are the very important crucial resistance zones for the Nifty to breach. So, currently there is weakness underlying in the Nifty. Moving on to Bank Nifty, the Bank Nifty also moved as per our expected lines. We were expecting some sort of a pullback in Bank Nifty, so the market did put back and it managed to close around 43,300 and to 18 levels. So currently, the Bank Nifty also there is seems to be an underlying weakness. This zone of the 21 DMA seems to be a hurdle for Bank Nifty to breach. So the immediate supports of Bank Nifty are 42,500, 42,000, and 41,650. The resistance for Bank Nifty is 43,000, 43,500, and 43,850. In the Indian VIX chart, the volatility which we were expecting has not really picked up. So the volatility is currently quite low in the Indian VIX chart. The FI and the DI activity shows the same continuous pattern which has been trading out since August. You could see there has been selling in the FI side, and the DIs have been trying to manage the rate of purchase, but you see there's a weakness of the DI purchases. So the October month, we closed down with DI net selling of 29,000 crores, and the DIs were purchasing around 25,000 crores. In the Nifty mid cap, the bounce was as expected, and we were expecting some retracement to the 21 DMA, and you could see that the week ended around quite close to the lines which we were expecting. The mid cap series ended at around 39,587. So, what now happens if the market is decided to be bearish? There can be a gap down opening from here, and the market can continue downwards with this negative bias. And if there is some positivity in the mid cap sector, it might break out its barrier from here and then go towards a bullish moment from here. But currently, given the weakness in underlying in most of the mid cap stocks, we can expect the negative bias to be much more intact rather than the positive one. Well, moving on to the US charts, you could see good amount of positivity in the US chart. Then Fed decided not to increase their interest rates, and this has led to a very good market rally in the Nasdaq. Very good strength, which was happening on Wednesdays, Thursdays, and Friday. You could see continuous gap up openings, and the market was enjoying this quite good rally on last week. Well, even the Dow has been managed to be positive. So quite good rally in the Dow. Also, we could see a good bullish momentum in the Dow, which is currently built up. And 39, 33,990 levels is a crucial resistance zone. And this would be a very good zone. If there is any breach beyond this point, we can expect some very good bullish momentum in the Dow. Having a look at the global charts, you can see good positivity which was continued throughout the Asian sector and the Europe sector. The FTSE did not rally so much, it was just moving along in the sideways zone. Whereas you could see the DAX had rallied very good on Thursdays and Friday. Continuously 3 days it was rallying. Even the Nikkei rallied, and there was some very good bullish candles which was visible in Nikkei. And the Kospi also continued its rally, very good upward momentum rally, which is given in the South Korean markets as well. The USD INR chart has not really done anything. It has managed to just stay within the zone. And as we had previously discussed, this zone seems to be in a sideways note. In the gold has just being managed to say sideways, no big action in gold. The gold managed to close around 19,990 levels. So it has been moving just sideways in the past week. Having a look at the oil chart, the oil is retesting some of the important support zones. You could see this level of $84 is a very good support zone. So looks like the levels of 82 will be tested before there is any upward momentum in the Brent oil chart. Well, summarizing the entire market summary, we were expecting a good pullback rally in all the markets, and the market really did participate in the pullback rally. We could see a very good participation on all the sectors. So we need to watch out for the important support levels as to where the market corrects from there and what is the further course of action for the markets. So currently, summarizing the Nifty, Bank Nifty, and all are in a still negative territory. We need to clearly wait out for the action in the forthcoming weeks before we can pan out the further course of action. Well, having an overall view of the CTI sectoral summary, I could see weakness still persistent in HDFC, ICICI, Axis, Kotak, and Federal. They are all trading well below their 21 DMA. In the IT sector, TCS, Infi, HCL, Tech Mahindra, Wipro, and LTS are all showing signs of weakness. HCL was standing apart. It was showing some strength, but not enough to confirm a bullish momentum. The pharma sector is also extending its correction. Dr. Reddy, Cipla, Sun, and Biocon are all down. Well, in the FMCG sector, I could see some buying which was happening, and stocks like HUL, Godrej Consumer, Dabur, ITC were all in the good accumulation zones. So we can have a look at the charts of all these companies, and seems to be interesting buying which is happening in these charts. In the healthcare sector, Apollo Hospitals and Max Health is the two charts which I am studying. Apollo Hospital did rally on Friday, but this rally is not confirming a good bullish momentum in Apollo Hospitals. Into wait out for this week action. In the chemical sector, Tata Chemicals and Pidilite were also trading below the 21 DMA, but Pidilite was showing some sort of strength. So we can have a look at the charts of Pidilite. The travel services, which we were seeing the charts, Indian hotels and Lemon Tree are also showing signs of weakness. The paint sector, Asian Paints and Berger are also showing the signs of weakness. The metal sector, Tata Steel, JSW, and SAIL were also below the 21 DMA. The auto sector, which was very positive last week, was showing signs of profit booking. Tata Motors was the chart which was standing apart, and Bajaj Auto, Hero Motors are all experiencing minor profit booking. In the service sector, I could see some accumulation which was happening in Kalyan Jewellers and Titan stock. Well, moving on to CTS stock specific chart, some charts are really in their good accumulation zones. So I'll be plotting out some very good accumulation zones which can offer some good risk to reward ratios. Well, having a recap of all the previous charts, we could see that the chart of Balrampur is really interesting. The price action activity on around this 400 levels was quite interesting, and you could see a bullish hammer which was being formed a couple of weeks back, and now it is trying to regain its bullish momentum. So, a very good accumulation point. This point is a very good point to be noticed around 410 to 420 levels. It's a very good. Point for us to consider this. Tata Chemical is the second stock which we were studying, and you could see a deep correction. We were expecting that it will take a major support at around 1000, but when the markets fell, the Tata Chemical stock cracked. We can expect some sort of a pullback to around 990 levels, and then the direction from there it will determine as to what will happen in this Tata Chemical stock. Right now, for the forthcoming weeks, we can expect a good pullback rally in Tata Chemical stock. The chart of HDFC Bank is also quite interesting. We could see that it was trading in a very narrow range, and it is taking a very vital support point at 450 levels. This is a very good zone, and looks like the moment it touches its 21 DMA, there will be further correction in this chart. So, having a look at the long term perspective of this chart, I would be waiting for 1400 levels before I can start some good accumulation. Having a look at Infi, the IT stocks were all trading in a sideways zone. You could see it was all trading in a narrow zone, trying to close the gap from its 21 DMA to the price structure. And we can expect that somewhere it will touch the 21 DMA and then have a minor correction in the IT sector. The chart of HUL is quite interesting. You could see good amount of accumulation which is happening in this stock currently. So these candles are denoting good series of accumulation. It was in a corrective mode from July, and till September it was reached out this bottom, and currently the stock is managed to take a very good support at 2450 levels. So this zone seems to be quite interesting. Any good accumulation zone, I would say this is a very good accumulation zone, and the stock is offering very good risk to reward ratio in this particular zone. So that's a wrap of this week analysis. I hope you like the content. Stay tuned for more upcoming analysis on a regular basis. I hope you have a happy weekend. Thank you.